Hi, Tony Carrion with you. Not surprisingly, the recent spate of bearishness in Bitcoin is still being attributed to the FTX exchange meltdown and the fall of its founder, Sam Bankman-Fried. However, I think that excuse is getting somewhat tired. As we look at recent data from Google Trends for the search term FTX company, the data show peak interest occurred on November 15th and has been declining ever since. Similarly, when we look at Google Trends data for the search term Sam Bankman-Fried, we see peak interest was reached on December 15th and has also been declining. I think we can reasonably argue there is no cause and effect relationship between the FTX meltdown and Bitcoin's recent price performance. It seems the market took the body blow and moved on, just as it did following the Terra Luna debacle last April. Instead, I think Bitcoin and the cryptos generally have been clouded by a buildup in bearish sentiment that really hasn't abated. As this chart of the DSI indicator reveals, it remains in oversold territory, and readings are suggesting that bulls trading Bitcoin futures are only 13%. The flip side, of course, is that 87% are bears. And as we look at this chart of Bitcoin proper, it has been attempting to rally against its November 21st low, following a decline of 28%. Now, we are working with scenarios that allow for further lows beyond those of November. But the bottom line is that the potential for further lows is already being signaled by the Elliott wave patterns and the current bearish sentiment trend. It's not being driven at this point by reactions to the FTX meltdown. The headline writers will have to come up with something else to blame. Thanks for watching.